So with this, I just want exposure to gold, the dollar value of gold essentially. And I can earn yield on that, you're saying, by buying C gold, which is over collateralized. And then I can pair it with a stable coin, USDC. And then I can stake that liquidity pair, C gold and USDC. I stake it on Vertek's DEX. And I earn the Vertek token as well as the CLF token. So I earn the Vertek token from the Vertek DEX, and I earn the CLF token from Collective Finance. And that's my reward. Probably going to buy a little bit of gold, a little bit of silver, and then I'm probably going to split my gold position up and get some C gold, pair it with some of my USDC, and I'm going to farm with it. I'm going to farm Vertek, and I'm going to farm CLF, and then I'm going to be like, okay, what am I going to do with that CLF token? Well, I might sell some of it and take some profits, or I might buy some Bitcoin or a representation of Bitcoin, BTCB, and I might pair that, then I might stake that, and then stake that, and then stake that, and then earn yield on all that as well. So I can take the money I was going to buy some gold with, and I could buy some essentially digital gold. I could put it with some of my fiat, but it's a stable coin, USDC. So I could take gold and stable coins, pair it, stake it, earn Vertek and CLF. I can sell either one of them straight up for cash profits, or I can then pair those with Bitcoin, like CLF with Bitcoin, and restake that, and then restake that again, and restake it again, and restake it again, and get yield all along the way. It's a really interesting concept, and all the while, I'm basically holding my value essentially that I started with in gold and a stable coin. So
correct.
That's my favorite thing. What do you guys think of the YaBonks strategy there?
Oh, I think it's a great strategy. That's the one I'm going after.
Yeah, exactly. Exactly.
I'm gonna get the gift. This you stake it, you stake it, you stake it. I'm gonna get that. Get that gift.
You gotta get the manic eyes in there. That really shows how many stakings is happening, right? So
yeah,
exactly.
You get the CLF, you pair it, and you stake it, and you stake it, and you stake it again.
That's right. Yeah.
So, hey guys, this has been great. I've learned a ton. I got to where I need to be with understanding my risk reward ratio with collective finance, and with everything we talked about, I am personally going to take up a position with this.
Thank you, man.
As soon as I can convince my wife. It's like, where's this magic money coming from? And I'm just like, it doesn't matter. It doesn't. It's internet magic. This is going to be one of those ones that I'm going to dip my toes in on. I like all you guys. I've known you all for a while. So I have a high level of trust with you guys, more so than 99% of the people out here in DeFi. So you guys are in the upper echelon of my personal network. And I think you guys have a really cool idea. I personally am a precious metals bug myself. I don't have a ton of it, but I believe in it in a philosophical, historical perspective. And I think any person who is trying to protect their wealth and is any kind of a prepper would have some cash on hand, some precious metals on hand, and some Bitcoin on chain. I think you guys provide some interesting vehicles for having exposure to the gold and the Bitcoin and silver and diamonds coming down the road potentially, and allowing people to earn yield while holding something that would be normally a stagnant commodity that just maintains and retains value. But now you guys are providing an opportunity to not only retain the value of your gold, but to earn incremental yield rewards on top of it. However much that is, we don't know yet. We'll see how it all plays out. But anything is better than nothing. And yes. I think we fully covered what risks are to achieve that reward on your gold exposure holdings. So that is my conclusion there. Did I sum that up effectively?
Yeah. You did great.
I'd say you nailed it.
Yeah. All right.
I'll put the gold stamp on it, man.
There we go.
Yeah. And thank you too for saying those things. You know, it means a lot to us when folks like you, who we respect their opinion so much and see a lot of protocols come across your radar. So we really appreciate you saying that. So thank you, man.
Mm-hmm.
Hey, my pleasure. It's the truth. If I have something good to say about somebody, I will say it. I'll go out of my way to say it. So I think you guys are the right people for this project, and it inspires confidence in me that you guys are going to manage it well. I'm going to put about $1,000 on that pre-sale, which is a lot for me. It's going to be one of my larger DeFi positions. And then on my next allocation for precious metals, which isn't going to be a ton of money, but I will split my gold investment that I was going to make, like $500 or something. I'll put half of that into C gold, and then I'll take some USDC I got lying around, stick it in there, and put it to work in Vertek. So yeah, this is really cool. I'm excited about this one. I'm a precious metals bug, and you guys are allowing me to make yield to earn rewards on my precious metal holdings in a way that's over collateralized and minimizes risk and custodial risk. I don't have to have like a kilo gold bar, which I couldn't, I can't have anyway yet. I'll get there someday. But if I did, there would be thugs breaking down my door trying to get that kilo gold bar, and I'd have to kaplow, Molan, Labe. And I don't want to do that. That is the last thing I ever want to do. I would much rather minimize my custodial risk of my precious metals, only keep a month's worth of expenses worth of precious metals on hand, and then the rest put into a more liquid form that has better custodial practices like you guys with over collateralization of the gold, as well as that over collateralization being in Pax G, which is audited with 1-to-1 physical in vaults. I love it. I think it's a great idea. Full transparency, you guys. I have a positive sentiment here, and these guys didn't pay me to act like this. This is my honest emotion. They paid me for my time to work on this video, but like if this sucked, I would say, hey guys, I think this kind of sucks, right? But I don't. I think this is actually pretty good, and I think it's in something that I think is really pertinent right now. Full disclosure for everybody listening, the YaBonks strategy right now that I'm figuring out, and this is a project that I am personally excited by and about. I love the concept of all of this, earning gold, as well as messing around in the balancer style dexes with the boosted pools and multiple yield farms layers. I'm going to buy probably $1,000 so I can get that pre-sale NFT. I'm going to buy $1,000 of the pre-sale so I get a 10% discount, get the NFT. I'll figure out what to do with the NFT later. And then I just love NFTs, right? Especially our utility ones that give you residual rewards and stuff.
Give you
dude.
Gold
right.
and stuff. Who doesn't like a little bit of gold?
Sold.
Just a little bit.
You sold me right there. All right, I'm gonna get $1,000 because every $1,000 increment of pre-sale, I get an NFT that makes gold, and then I'm gonna take my pre-sale liquidity tokens that I get, and I'm just gonna stake them. I'm gonna stake them, and I'm gonna have these NFTs that I'm gonna hold, and I'm gonna be getting rewards all along the way. And heck, I might just stick those NFTs up on the marketplace at a out of the money premium. And if things change in the market and one day somebody wakes up and says, oh, that's actually a really good deal, and they take it, then I made my target profits that I was looking to make. So many strategies here, but that's what I'm going to do. I'm going to get it on the pre-sale at about $1,000. Going to get the NFT. I'm going to stake. I might test the waters with a 30-day or a 60-day. Heck, I might go balls to the walls and do 180-day because I'm crazy like that. But then I'm probably going to, on my next precious metals investment, put half of my gold investment into C gold. And then I'm going to take that with some of my USDC, pair it, stake it, and then get Vertek and CLF, and then kind of loop that into the ecosystem again. So that's my strategy.
My name is Brian. I'm one of the 4 co-founders here at Collective Finance. My job at the protocol is really protocol oversight, direction, capital raising, and investor management as well. I am a real-world physician, have been so for about 15 years.
Hey, everybody. My name is Zach. You might see me as Cryptzom. I am also one of the co-founders at Collective Finance. My position is in networking, investor relations, helping manage investments. I have multiple businesses in the States.
Greetings, everyone. My name is NP. I worked my way up, becoming a core team member in a couple of projects, and now working on a magnum opus of projects together with Collective Finance. My main project would be Vertek, and we'll be very happy to host Collective Finance's liquidity once we are up and running.
My name's Chrome, also known as Jacob. Got the position as a mod and then slowly worked my way up to get on the core team and now help on the operational and back end.
Probably the best way to earn the most yield in collective finance is the triple staking, triple yield reward earning method, where you stake CLF liquidity pair all the way down to the XCLF NFT, and then you can further boost those rewards if you understand how the Vertek DEX works and the Volta system, and taking advantage of that to get the boosted rewards based on the periodic voting system that boosts certain pools. If you understand how that works, if and when that happens, you can get 2.5x the rewards you're already getting. That makes things get crazy. Now, I think we all agree that that's potentially the best way to earn the most amount of yield in this.
Think about all the different layers of yield that you're getting, right? Just for staking, you're getting CLF and VRTK. And then for lock staking, you're adding that next layer on there. Without giving you a number, it seems pretty appealing to me.
You got your CLF token, and then you got your commodity tokens like C-Gold. And with your CLF token, you basically liquidity farm with it 3 times over. And at the end, you got this really interesting derivative product that has a marketplace on Vertek that you can trade and make potentially even more with your capital. CLF has like a whole stack of ways to make yield from it.
Don't take your eyes off of the native token CLF as well. CLF is the reward token. It's also the oil that drives the collective finance engine. So there is a potential upside in that. So make sure you hold a little bit of that as well.
From launch, we're not giving back free CLF. We're giving back liquidity. Our angel seed round investors, they receive locked positions as well as a vested token allocation. So when you put these two things together, we're going to incentivize people to lock, and then there's not a lot of free circulating supply. So both of those two things decrease sell pressure dramatically. If you combine that with some increased buy pressure, then I think volatility could play to your favor. Was when I received that liquidity position, I would be looking to stake that and then lock that as XCLF to start getting those rewards, right, immediately. One of the things that you want to keep into consideration, I think this was the point that Cryptsom was making, that if there's potential for the CLF token to have a significant price increase at the time of launch or even down the road, you want to be able to take profit as appropriate, right? Now, how could you do that? You could do that through the rewards that you earn through your lock stake position. It could be through the NFT that you own. You could break a small amount of your liquidity, or a combination thereof, right? So I guess that's the point, to be able to use that volatility potentially to your favor when the situation permits.
Okay, good to know. And I could see that volatility going up if and when the voting happens in the Vertek gauge system, the Volta, if any of the CLF pools got voted for, or even C-Gold or anything related to collective got boosted, I could see a whole bunch of people buying up CLF tokens, pairing it, and then going down the triple yield staking process, right? So I could see that volatility at that point that you're talking about, Brian, especially during the voting periods. I would be on the edge of my seat, actually, be like, which is going to win the vote this week? And if it's anything collective, you're probably going to see a spike or something, or increased buy pressure. Just my opinion. Who knows?
Yeah, and remember, there's decreased sell pressure too. Sorry to interrupt you, but just like NP said before, right? If you have your XCLF position that's represented by an NFT, and maybe that's in a 60-day tier, but it's going to unlock in a few days, right? And it's timed with the emission votes and things, that could become much more valuable at that time. So there's the primary market you can play. There's secondary. There's a lot of things to think about.
There is. And also, if I'm looking to take a new position in collective down the road, I could check that Vertek NFT marketplace and see if I can't pick up a staked position that I was looking at anyway at a 5, 10, 20% discount because somebody is trying to trade out of their position to gain for whatever reason, or to make some, maybe they're selling at a profit, but I'm getting in at a discount just because of the timing of things, right?
Exactly.
So there are efficiencies there that I think people can find more than any other time in history. I feel like our monetary system's about to implode. I feel like fiat's about to just get wrecked. Honestly, personally, I don't know when it's going to happen. Not financial advice. I'm not a financial advisor. I can't tell the future, but our monetary system's so out of whack, and they're just kicking that can down the road, kicking that can down the road. They're manipulating this stuff on paper day in, day out. At some point, this is going to get called in, right? And people are going to say, I want my physical. And they're not going to have enough physical for the amount of paper receipts they've written, right?
Yep.
They're not going to have enough CLF for the XCLF receipt tokens they got in their wallet. You know what I'm saying? You know, but you guys, you understand the analogy, right? Like they're writing these receipts that they're writing checks.
They're writing checks they can't cash.
They're writing checks their bodies can't cash. You know what I mean? But they're writing checks that their bouillon can't cash. And at some point, it's going to short squeeze like crazy. When that comes toppling down, I have a feeling silver is going to go up a lot. And I have a feeling gold is going to go up a lot. And even if it's momentarily, even if it's for like a few days or a few weeks, where this goes 100x and this goes 10x, hopefully I'm going to be in a liquid asset that I can move around quickly, that I can capitalize on that, rather than me standing in line at the pawn shop being like, hey, what can you give me for this? Oh, a 50% premium over spot? What do you mean? So I think this is actually really cool idea for me to have some liquid exposure to this stuff in a way I can earn yield and get in and out quickly if I need to. So boom, there we go.